What we're noticing is that the tech adoption in my industry is going up very quickly. Tenants especially are demanding digital experiences from their customers. Pre-pandemic, if tenants were visiting 10 rental properties before finally picking one, now they don't want to do that. They want to see videos, they want to see 3D renders of the property, they want to see virtual walkthroughs of all 10 of them and then decide, okay, I want to maybe go and visit this one which I like the most. More of, okay, like I'll see it and then I'll book it, right?
Welcome to the Startup Operator podcast. I'm Roshan Cariappa. The real estate market is extremely fragmented and doesn't really spend a lot on software relative to some of the other industries. But my guest today saw this as an opportunity and he's building what he calls the operating system for rental real estate. Ajay Kumar is the co-founder and CEO of TheHouseMonk, which has over 100 customers in 15 countries across the world. Ajay has been a real estate entrepreneur earlier and understands the market really well. We spoke about some of the trends that are in play right now, how technology can transform the business, and some challenges that Ajay and his team are solving while scaling the business. This was an insightful conversation, and I'm sure you'll like it. So let's dive in. Hey, Ajay, welcome to the Startup Operator podcast.
Good to be here.
Thank you so much for making the time. I really appreciate it. So, Ajay, I want to first understand, what was your process of going from idea to product to company? What was that spark of inspiration and how did you decide to build for this market, the real estate market specifically?
Okay. So my co-founder and myself, we had started another company called Cozee Homes. We started this in 2015. Broadly, it was a B2C play focused on the Indian market. We wanted to give people standardized rental experiences, home rental experiences. The thought was that every time you land into a new city, you look for a Hilton, you look for a Radisson as a hotel, right? Because they give you a good experience. But when you're looking for a long-term home rental option, there is no company that's providing that experience. You're completely at the mercy of brokers and landlords. And we wanted to bring a standardization into that experience. That's essentially how Cozee Homes started. We made sure that our brand promise was all homes came with furniture, all homes came with internet, and all homes came with once a week housekeeping, which was the brand promise. So we started there in 2014-15. And we built a reasonably good business, I would say. So we were managing close to about 1,000 rental units as a company. We eventually exited that business in late 2018, early 2019. We sold it to a fairly large real estate broking group based out of Bangalore, and we made the exit. Now, around the same time, my co-founder and myself, we were thinking what next to do, right? Like we've done one company, we've had a reasonable exit, but we still need to do something, right? Like we need to build something big, which is what we wanted to do with Cozee Homes. For a bunch of reasons, couldn't happen, but we wanted to build something big, and we were thinking, what do we actually do? Should we stick to the same domain? Should we do something in some other domain? How do we actually go about this? That's essentially when we made a very reasoned call that we wanted to stick to the prop tech industry. The core reasoning being that real estate companies spend lesser on software than any other industry. So only 0.3% of industry revenues in real estate goes into software. Now that number is about 0.5 to 0.6%, even in manufacturing, which is the second lowest. And that number keeps increasing. So a pharma industry spends about 0.8 to 0.9%. And then the number keeps changing, right? Retail actually spends quite a lot on software compared to a lot of other industries. So we looked at that and we realized, and we formed a thesis that over the next decade, PropTech is most likely to become very, very big. That was one reason, that the market opportunity was very compelling. And second big reason was that we had been in that industry. So we really understood what does it actually take to be in the real estate industry, provide service to customers, and what do businesses in that industry actually have as problems. So given that the market we felt was going to grow and we already had experience in that domain, we basically chose, okay, we're going to continue playing in this domain. So most companies are built slightly differently, where they have an idea and then, or they face a problem and then they build solutions, to overcome that problem, or, chase that idea. For us, it was a little different. We were very thesis driven. So we decided we want to be in this industry, and we decided we understand certain problems in this industry and we'll go ahead and solve it. So that's essentially how we got started in this business. We focused on getting customers first before we did have an MVP, which was working, but then we ended up getting about 5 to 6 different customers within the real estate domain. Meaning we got a real estate developer as a customer, we got a real estate brokerage as a customer, We got property management companies as customers. So even within this vertical, there's a bunch of different types of customers. We ended up getting a whole set of them, as different customers for our product. And we kept iterating and we kept seeing like who is actually using the product, who is actually finding value in the product, and where do we see a business opportunity, right? This process for us took about a year to say that, okay, like this particular customer segment actually works for us. And that's essentially when we got into, okay, within real estate, which is our macro ambition and our larger vision, rental real estate is actually paying the highest dividends. It looks like the industry which is most likely to grow in the next 5 to 10 years, and we'll pick that. And then we continued refining the product, and we've been building the journey from there.
Fantastic. So you kind of took a market position, right? I mean, you developed a thesis around it, ran a bunch of experiments, and then converged on a particular problem, and then what solution you could offer to that particular use case, right? So I'd like you to walk us through the decision making in terms of these experiments that you did itself, in terms of identifying rentals specifically. Right?
Yeah.
Is it positioned more towards millennials? We hear of the sharing economy, for example, or what are some of the trends that you thought that would amplify whatever you're building?
Okay, so there are 1, 2, 3 broad trends which are happening within the rental industry, right? So I'm talking more market driven. I'm not talking as much product driven, right? So once again, as a team, we understand the market very well, which I believe is super important, right? It's an unfair advantage in this market, in this industry, where you really understand the market, right?
Yeah.
So first large trend, which is happening globally, right, in real estate, is that more and more institutions are coming in and owning rental real estate assets. Normally in India, when you see you're renting, let's say a 2 bedroom from, let's say, an NRI, or like someone who's just, invested in the property, or some auntie, uncle who's staying in the ground floor and they're renting, their top floor for someone. We are seeing a trend where this is changing, right? Big funds like BlackRock, DSP, all these guys, they're coming in and they're buying out real estate purely for the purpose of long-term rental, which is a very, very important trend. Second, we are seeing businesses emerge, right? Typically, landlord rents to the tenant directly. We are seeing a trend where businesses are coming in and enabling this entire value chain. This is happening in commercial real estate, where typically co-working companies are a very good example. They have come in between commercial real estate owners and offices, and they said, okay, I'll build a full end-to-end ecosystem for you in the middle. Same thing is happening in residential as well, where co-living, student housing, even in family rentals, operators are coming in and saying, okay, your owner doesn't need to interact with the tenant. We'll come and manage the entire ecosystem, which is a second big trend. A third very big trend we are seeing is that across the world, young people are putting off home buying, right? Typically, there was a trend that, okay, like you get a job, you get married, buy a house, right? It was a very sequential progress, especially like in emerging economies, especially in countries like India. That was very much a trend. But the trend has been bucked, right? In the last 10 years, the age of the average first-time homeowner in India, in urban areas, right, in urban cities, has gone from 28, where it was in 2010, to somewhere about 34, which is where it is standing right now. So home ownership is getting delayed, but people still have to live somewhere, right? So people are obviously renting a lot more. So that's a third trend. A sub-trend within this is that tenants are looking for much better experiences, right? Like earlier, rental was just a stopgap. Okay, I'll like somehow like stay in a house for rent for a couple of years before I can buy. But now people are thinking with very zoomed out timelines, right? Okay, I'm gonna like rent for the next 3-4 years. I'm not even thinking about buying a home. So people are expecting much better level of service and experience, right? As a tenant itself. So these three high level trends are things that we spotted very early on, because we were in the industry, right? So we knew that because the industry is going more B2B through asset ownership through institutions, with more businesses coming in to operate and like as enable these transactions, and the end customer behavior actually changing, all these three puts a very valid argument that this market is in motion, right? There's something fundamentally changing about this industry. So that was added to our thesis, saying, okay, now is a good time to attack this market, which is essentially why we're building the HouseMonk.
Right. Okay. And you call yourself the operating system for rental real estate, right? I mean, could you describe some of the use cases that you solve very briefly?
Sure. So when we look at it, we always wanted to build a very end-to-end solution, right? We don't like niche solutions. There's two ways to build companies, right? Like you either build a very small, tiny solution, which comes in and says, okay, on top of a HubSpot CRM, my plugin does this one small automation for you, right? You can enter the market that way as well. we never found that attractive, right? We wanted to build a very end-to-end solution and build very deep relationships with our customers, which is how the HouseMonk has been built. We manage, for our customers, we help them manage pretty much their entire business. Everything from what are their properties, what is occupied, what is not occupied, have they collected rent, allowing them to invoice their customers, managing their operations, move-ins, move-outs, contract management. All of that comes into our ecosystem, which is through our first product called Recore. We have a second product called Reops, which essentially helps them manage their operations, including visitor entry, exit, facility booking, asset maintenance and management, so on and so forth. Becomes a very pure play B2B software for their team to essentially manage operations. Our third product is called ReXP, which is a tenant experience platform. It's something that our clients, which is essentially an asset owner or a property manager, they use that to give a great experience to tenants who are staying in their properties. So we have 3 products in the market. We're launching a few more, but all of them, as you can see, are pretty end-to-end in nature.
Right. So when you build an end-to-end solution, you really have to understand the stakeholders, their priorities. You need to understand the market in depth, right? Unlike a point solution.
Yeah.
So, what are some nuances that you've realized in building for this real estate market?
So given that we've been in this industry for a while, it comes very naturally, right? Like for us to understand. But what we are trying to do is how do we institutionalize this, right? It doesn't matter if the founders understand and then the team doesn't understand, right? So we've spent quite a lot of time giving trainings to our team to help them understand how to do this themselves. We have quite a lot of training sessions. We keep doing like internal Q&As. We keep doing a lot of knowledge sharing sessions to help people understand the entire industry. Real estate broadly is a very slow to move industry. So you need to have patience. This is something we keep telling our team as well. It's a very offline world which is moving online. The pandemic has changed things quite a bit for the industry, and I'm sure we'll talk about that a little down the line as well. So that's putting the industry even more in motion. So you need to kind of work around a bunch of these things and then build solutions on top.
Right. Right. And yeah, I mean, could you talk about how the pandemic itself has affected the industry?
Sure. So the pandemic, I think short term has had a negative impact, right, on our customers. So, but we do obviously have second order effects. What happened is that as soon as lockdowns happened worldwide, right, typically all the gateway cities like Singapore, like London, like New York, all of them started shutting down for travel. And given that a big number of migrants are the core demographic for renting, the rental market started collapsing. Right, this has been happening in most parts of the world. Now, when the rental market collapses, people who manage the rentals and people who own the rentals, obviously their business is going to get affected, right, because of which our business also got affected, right? So from that perspective, the first 3 to 6 months was pretty difficult because more than difficult, it was very uncertain because we didn't know when there was going to be a revival. So we weren't quite sure how people will react, right? So a lot of our customers were like, hey, can we pay a little later? Like, hey, can we change our payment plan? Can we do this? Can we do that? So that was a very big challenge for the first 3 to 6 months. Second big challenge was in reorienting the team, right? Because our team was also not used to this, right? Nobody knew how to take care of this. So handling the pandemic from team management perspective was a little different, but the core business got affected because our customers' business got affected. How that's changing right now, I think most of the US is back to normal, right? Many are back in office, if not, they're back in city. So most of US is back to normal. So our customers there are starting to revive. Many parts of Europe is also very much on the trajectory to being back to normal. Most of the Middle East is also back to normal. A good chunk of Singapore and Southeast Asia is also on its roadmap to being back to normal, right? So I think except India and a few other countries here and there, most parts of the world are showing a very drastic, very quick, right? To essentially come back and, live life the way we were living before the pandemic. Now, when this is happening, what we're noticing is that the tech adoption in my industry is going up very quickly. Tenants especially are demanding digital experiences from their customers. And I'll help you understand what I mean by digital experience. Pre-pandemic, if tenants were visiting 10 rental properties before finally picking one, now they don't want to do that. They want to see videos, they want to see 3D renders of the property, they want to see virtual walkthroughs of all 10 of them, and then decide, okay, I want to maybe go and visit this one which I like the most. More of, okay, I'll see it and then I'll buy it and then I'll book it, right? So
they're window shopping a lot more, basically.
They're window shopping, but only through the internet.
Digital, yeah.
Digital. Totally digital. So when you're sitting at home, it's much easier for you to see 10 properties, right? Than when you're going offline. But they want only to work with companies and businesses that provide them this. right? If they call a landlord or if they call a property manager and they you come and see it in person, they don't even want to go there. An astounding 20% of home sales which happened in the US in the last 12 months, the buyers put in bids without physically stepping foot into the property.
Wow.
Right? Crazy, like absolute crazy numbers, right? Now we'll have to see whether that trend is lasting trend, but that number was like zero, right? Like pre-pandemic. It's at 20% now. Most likely it will hold and then maybe it will continue increasing slowly. But it's a very, very defining trend. The rental number is even higher, right? Like almost like 40% of people have started booking properties without ever physically stepping foot into that. So that's one portion, right? Like even pre-transaction, like tenants don't even want to step foot, like they just want to see it digitally. Even post transaction with respect to, let's say, like booking a complaint for maintenance, like paying their rent, they don't want to do any of these things offline anymore. In India, like UPI and bank transactions have become very ubiquitous, so like we don't face this problem, but a crazy 40% of the US still pays check or cash as rent, which is very, very surprising. Those trends are all getting changed, right? There's a lot of home maintenance which is happening now DIY in the US, where if you're having a leaky faucet now, you get the plumber on Zoom and he'll just like guide you how to do this, right? Instead of the plumber actually coming to your house and fixing it. And a lot of the small fixes are happening through this. So if you look at it, the common theme being that we don't want to do anything offline, we want to use tech, to basically do all these things. So we are seeing increased requests from our existing customers who were there before. Even if they didn't use, let's say, 100% of our product suite, now we're seeing they're actually using like 80-90% of whatever we're offering. They were maybe at 40-50% before, so we're able to upsell very, very efficiently because they want to bring more tech into the value chain. Second thing is that earlier we had an assumption that unless a client, either an owner or a property manager, like had at least 100 rental properties, they would not really invest in software, right? That was an assumption that we had, which was holding true till the pandemic started. But now customers are adopting software much earlier in the value chain, right? Like we have customers now who manage as small as 6 rental properties in their portfolio, to the highest being somewhere about 6,000, right, in their portfolio. So the spectrum has actually like increased like significantly by an order of magnitude, which to us basically opens out an entire new market segment. So we're very excited by that as well.
Nice. Yeah. So the other, and just to follow up on whatever you're saying, right? So the other aspect of real estate is the fact that it's an extremely fragmented market, right? I mean, you could have like individual investors or institutional folks. You could have like people who own 6 properties or maybe 600 properties and so on. And all of their needs will vary. And it also depends on what part of the country or what part of the globe they are in, and whether it's long-term rental, what other types of renting, leasing is available, and so on and so forth, right? I mean, there's so many options and so on. What are some of the opportunities and challenges that you see operating in this kind of a market?
Very good question. I think, look, as a founder, like I go towards the opportunities first, right? I think the really good opportunity is building a very bottoms up play to attract a very fragmented market, right? So if you look at someone selling SaaS to banking industry, right? You have maybe a maximum of 100 to 200 potential clients, right, in any particular country. So you have to take a very top down approach, right? You have to see like, how do I proper like outbound sales, right? Like that's essentially what works. When you're in a fragmented market, bottoms up is essentially what works, right? So the real opportunity that we are seeing is that whatever Slack did to the communication industry, right, can a PropTech company be built on top of that, right? Built on a freemium basis, give it free for the actual end users. Let the accountants and real estate businesses use our accounting tool. Like let the ops team like use our ops tool. Keep it free for 1-2 users and then maybe like start charging a little beyond that, or keep it free for a certain portfolio size and then start charging beyond that. I think that's an incredible opportunity. And there is very real network effect which sets in, because these people like talk to each other. Like in a vertical SaaS business, like everyone wants to buy what other people are buying, right? Like the number of choices are much limited, but it's super important to win the early customers and the marquee logos. So if I can tell them, hey, like Damac is using my software, right? Like entire UAE market is mine. It kind of like works that way. So I think there's a very good opportunity in a fragmented market to build a very bottoms up, very product led growth approach is something that definitely is a very, very good opportunity. I think largely the way that we are doing it is, once again, we're building multiple products to service the same customer, right? We never had a one product approach. We actually started with 2, even when we went live. Now we have, and then we launched the 3rd product like late last year. Now we actually are launching our 4th product as well. So the second big opportunity is that when you're in vertical SaaS, upselling is extremely efficient. anything that we build, everybody wants, right? So that's once again a very, very interesting opportunity overall. I think the challenge basically becomes, how do you win the big logos and how do you win the big customers, right? That's a challenge that we are trying to address at the HouseMonk as well. We have not cracked it yet, right? To be very honest, as a company, we've gone bottoms up till now. We have, broadly, it's a free trial led model that we use to convert customers. We also have a freemium, which we introduced recently, which is also working reasonably well. But it's an inside sales team which supports it, right? And broadly, it's a very inbound motion that we've set in place. Now, when we want to go outbound and try to get the bigger customers and make the move up market, right? It's a fundamental change, right, that we have to do in company DNA itself. And not that it's not possible, but it's of course very difficult. And in vertical SaaS, my thesis is that unless you can do both, you can't build a very big company, because the market size is limited, right? Like you only have like one vertical that you're targeting. So unless you can crack both the top of the pyramid, mid pyramid, and bottom of the pyramid, you can't really build $1 billion business. So now we're trying to figure out how do we do that. That's becoming a challenge for us. That's something to figure out. Second thing I think about vertical SaaS is that in vertical SaaS, you can't focus only on one geography. Once again, for the same reason, because then your TAM becomes very limited. You have to figure out a way to approach multiple geographies at the same time. Now, that poses challenges both in product as well as go-to-market. To a good extent, you can overcome this because the needs are largely homogeneous, whether it's a landlord in UK or whether it's a landlord in Singapore. Like largely they need the same things. So you don't have to like really rethink the product ground up. Small customizations are enough, but it is still something to think about, because unless you have like customers in different parts of the world, you cannot once again build a big business. So these are the challenges that we're looking at right now.
Right. Just one more question on that, and then we can move on to customer acquisition and so on. So, being verticalized, you have to be really relevant to every persona that you serve, right? But at the same time, you have multiple personas that you're serving. Like you mentioned accountants, right? I mean, they might think of the HouseMonk in a different way versus, let's say, a broker versus, let's say, a landowner, so on and so forth, right? I mean, so how do you, abstract what is required for each of these personas, and how do you put a process in place, the product in place to be super relevant for each of these personas?
Yeah, that's a good question. I think that's kind of where the refinement to PMF like really is a very important part, right? And I think it's as product driven as it is market driven. I think you need to have a lot of business strategy which goes in, but you also need to look ground up on who you're serving, who's using it, who's not using it. I think when we started, right, our month one, we did not have a persona beyond real estate business, right? We said, like, anyone who has a real estate business can be a potential customer for us, and we'll build an end-to-end business product ecosystem around real estate businesses, right? But then as we were building further and further, that's when we realized, no, like actually there's about like 8-9 different types of real estate businesses. So we can't go after all of them. Okay, like remove facility managers, remove owner associations, remove real estate builders, remove real estate brokers. So we ended up removing a whole set of customer segments, saying not now. We'll do them later, but not now. So that was one round of elimination. I think the second round of elimination, which is a little more specific to my industry, is that even in rental, it varies by asset class. So asset class for us is like residential is an asset class, commercial is an asset class, hospitality is an asset class, warehousing is an asset class, data centers is an asset class. So we have asset classes as well, which is another like industry defined terminology. But that was a second way where we classified, saying, okay, first, actually, we're only going to do residential, right? Like commercial co-working, like we'll attack that later, like hospitality will attack that later. So like we kind of like put off a whole set of other types of customers we eliminated. And then we decided to build only for residential rental. So that's going to be the first market that we attack. There also, we once again said, we will not go after that individual landlord, right? That's not going to work. That's a very bottoms up B2C kind of a play. Not for now, right? Like remove that. Once again, given that a lot of this was happening during the pandemic and we couldn't meet people, like in person, we realized that going very top of the pyramid will also not work, right? Like they typically want like an outbound sales motion. They want to meet before they buy. There's a lot of nuances in place, before you go up market. So we said, okay, top of the market also is gone, right? So it took a lot of refinement, and this didn't happen overnight, right? It took about like 18 months to get to this level of understanding, saying, okay, mid-market players, residential, rentals, right? This is basically our niche, and we're going to build for them. So that gave us a lot of confidence that, okay, like now we have homogeneity here, right? At least at a customer level, user level. So from there, we'll build from there. Luckily, when you define to this extent within a vertical market, geography doesn't play as big a part as what people normally think. So we were advised by a lot of investors saying, no, just pick one country and go deep and all those things, right? We always stuck to our gun saying, no, that's not the case. Actually, in our industry, like it's very easy to operate in multiple geographies. That's getting validated. Like, so we have like paying clients in about 15 countries, and it's not difficult for us to serve customers in 15 countries, right? Like normally people said it'll be crazy, like it'll not happen, this, that, and all, but not the case, right? We're still able to service them pretty well with a fairly nimble team and with not that much modifications to the product. So I think it kind of works that way.
Right. You mentioned 15 different countries, right? So how did that happen? I mean, was it a conscious choice to, put 80% of your GTM efforts on XYZ country, and then, you got inbound from elsewhere and then it sort of organically grew? Or also the fact that, I mean, you mentioned real estate is a very offline world, right? I mean, literally you're talking about locations and places, houses, whatnot, right? These are
Yeah,
not people who are very, I won't say digitally savvy, but they're not used to procuring a lot of software, as you mentioned. So,
yeah.
how has that experience been like, working with these people across the world, right? And making them pay for intangible software, basically.
Very interesting question. And I think even for us, we're learning, right? Like as we're going ahead, I think my thoughts on this might change in the next couple of years if we focus on one particular geography, and like if that ends up being easier or a better choice, right? Maybe my thoughts might change. Largely, I think the reason has been that our GTM strategy has been very, very inbound, right? We have not gone outbound at all. Apart from like a few early clients that the founders we got through our network, pretty much all of our customers have come through inbound. Even in inbound, we have actually not done a lot of paid marketing, right? We've done a lot of content marketing. We've done SEO to a reasonable extent. We've obviously like done some paid as well, but most of it has come through organic, right? Like, and it's come through partners as well. So because of this, leads were coming from everywhere, right? Like we were getting leads from North America, we were getting from Europe, obviously India was a market, Southeast Asia, like Middle East. So we were getting leads from too many different places. We have started showing some restraint in saying, okay, no, like South America, we're not going to do. It's become very difficult. Like Africa, will not do. Like there's not enough pricing power there. Far East is too difficult. Like we don't have the language capability. So we have like put in some boundaries and some restrictions, but we have allowed ourselves to be a little more open-minded, right, when it comes to servicing customers from certain geographies or certain regions. What we have pleasantly been surprised by is that it's not as difficult as what people say. I think a lot of startup advice keeps going back, like do one country, do it very well. Especially there's a lot of people say, no, do US, do US, do US, right? Like it becomes such a common advice which is given to startups, especially in SaaS right now. Um, we didn't do it, right? Because like leads were coming, customers were already happy with the product, they were willing to pay. Why would you say no, right? That's been our approach like so far. Mainly because of the pandemic, like we wanted to conserve cash as well. So we didn't want to put a lot of money into marketing into certain geographies, right? So like we removed our marketing budget, which essentially meant that more of SEO, more of organic, more of content. And these content pieces were being discovered by customers in many different parts of the world. And it started coming in that way. The only challenge that we've had has not been in servicing the customers. With respect to product, there has not been that many requests. With respect to changes, like with respect to workflow, automation, whatever that could be. We have done a reasonable number of integrations. Like we come integrated with about like 30 different external SaaS products. So the only customizations that people have asked for is with accounting and how they manage taxes, like locally. But we come pre-integrated with like Xero and QuickBooks and a whole bunch of accounting software. So that happens there anyway. So it's not something that we have to do. Apart from that, language customizations keep coming up from time to time. But once again, that's not a very tough thing to do. Like that's actually a solved problem. It just takes a one-time effort for your team to get that infra in place for that. After that, it's just a very simple Excel file upload. So we managed to get till there. So it's not a very big challenge anymore. Now we're thinking, should we double down into markets which is making the most sense, where we have a good concentration of customers already, where they're giving us referrals, where market opportunity is a lot more. I think the next 2 years, we've identified maybe 4 or 5 countries that we want to go much deeper into. So let's see how that works out.
Right. So the flywheel has begun in those countries in some sense. It's moving already. I mean, you want to sort of
Yeah.
accelerate that further.
Broadly, like we have like marquee customers there.
Right.
So once you have like a big name logo on your client roster, right, like just makes it infinitely more easier to get the next 10, 20, 30 clients.
Right. So, yeah, I mean, one of the things that also struck me is like how much of the conventional SaaS advice or conventional business advice, right? I mean, it doesn't apply sometimes. I mean, when you are you still have to discover things that are most relevant for your business, and you really have to come up with a playbook for yourself, right? I mean, if everything was so templatized, then I mean, everybody would do it, right? I mean, there would be an easy answer for everything, and we could just like automate the hell out of everything. So
Yes.
yeah,
I think
it's
it's
interesting.
very important for, this is not just founders, right? I think this is like for everybody in the team to understand that, look, advice is something that people give based on their experience, right? It's not based on your experience, right? So of course they have a reason for giving that advice. Like no one means badly, but just keep that. That's just one more data point, right? If you're genuinely getting requests from a lot of customers in, let's say, Belgium, right? Then just do Belgium. It's okay. Like, as in, nothing is going to stop. There is absolutely no reason, right, for you not to do that. Just because conventional wisdom is that, no, do US and ignore everything else. Like, there is, for every one company that succeeds in the US, there are 9 of them that die very quietly, right? Like, which nobody talks about, nobody hears about, right? So, see, I think the big problem, right? I mean, we're going a little off topic, but I think a very big problem is that a lot of advice is given by investors, especially from the VC community, and they give advice based on the big hits in their portfolio, right? And understandably, the big hits have all taken a given trajectory, right? But to them, they optimize for companies that can potentially exit at a billion plus, right? And then like all advice is for that. So that's okay, right? If your very clear ambition as a team, as a founder, is not, it's either a billion plus exit or like nothing at all, then yes, I think you can follow some of these advice points. But I would really ask people that if there is a less risky path to doing 10 million in revenue, right? Would you take it? Right? A VC will not back you, right? But will you take it as a founder? I think the answer is like 70% of founders will say yes, right? Nobody gives advice which is tailored to this 70%. Everyone's giving advice on the other side. So I think you have to like take your own path when you're building your own company.
Yeah, a lot of it is bias and perspective also, right? Like I think Nassim Taleb says, don't ask a barber if you need a haircut, basically,
Right.
right?
Yeah, yeah, yeah,
And a lot of it is, yeah, and especially if you look at the VC business itself, I mean, it's such a it's such an extraordinary business, right? Where you're saying that 90% of your money will not return, or perhaps, I mean, 70% of your money will not return anything at all, and the
yeah,
remaining 10 or 20% will hit it out of the park, right?
yeah,
It's like, for a public market investor or someone, I mean, it's crazy, right? It sounds ridiculous, right? Yeah. So, what are some other things that you're, solving as a founder? What are some high level challenges that you're founding at this stage of the journey right now? I mean, I think you are a couple of years into TheHouseMonk, right? I mean, you
yeah,
have product market fit on a few different axes.
yeah,
You're growing fairly quickly, right?
yeah.
So what is the next stage? What does the next stage of evolution look like for you?
Yeah. I think there's like three things, right, that I've identified for both myself and my co-founder, saying like we need to focus on these three things. I think first thing is that we're trying to figure out priority, right? I think as a founder, we need to show some restraint, right? Like which we have not done. Like because like normally we're excited by every opportunity. Yeah, yeah, we kar sakte hain, like we can do this as well. Let's try that also. Let's try this country. Let's try that segment. Let's do this next feature. I think we need to show some restraint, mainly from the perspective that if you don't prioritize at your level as a founder, I think at the next level with your team leads and like delivery heads, and then like to your end-to-end team, like it starts exponentially becoming more, right? And as founders, because you have so much context, if you're doing 3 4 5 6 things in parallel, you can still figure out, okay, no, this is how this is happening, that's how that's happening. But at the next few levels, it doesn't happen in the same way,
Yeah, it
right?
doesn't translate.
It doesn't translate at all, right? Like, so
Yeah.
it becomes like, hey, these guys are like, oh, yesterday only they said Australia, now suddenly they're saying Japan. Like, what is happening, right?
Yeah.
So I think super important to learn priority, which we are also trying to do.
Yeah,
Um,
just to add on that front, right? I think because you have the context, there are two things that happen. One is that you have the larger picture. So
mm,
things that may seem very separate or disparate to someone else may not be that way, because you know the connection, right? You know why
yeah,
that is important, why they are connected. And
yeah,
also, I mean, sure, in terms of executional like efficiency, right? You cannot match a founder. You just,
yeah,
I mean, you can close the loop a lot faster,
yeah,
as a founder. If Yeah.
yeah, you can. And you see, it's mainly because you're so obsessed about it, right?
Yeah.
Like, and so it's not even like I even take an effort. Like I open my Twitter, like everything that comes is about my industry, right? Like I open my email, I get 3 newsletters every day in my industry. I open my LinkedIn, like there's so much content about this. And not just that I get access to this content, I am organically inclined towards opening and reading a bunch of these things, right? Just because that's my sheer interest. Now, that gives so much context in my head, which leads me to think, oh, maybe next we should try this.
Mm.
I know that, okay, like, hey, there's a lot of fund mobilization happening in the UK for student housing sector. Maybe we should focus on that, right? So there's a lot of these things which happen. But I think it's very important not to keep front loading all of these thoughts onto your team, right? Because then they start like getting very confused because they don't have this much level of context.
Correct.
And they need to focus, right? Like they need to focus on, we're going to do this. We're not going to change plans. So that's something that we're really, really trying to do as founders, like just figure out priority and make sure it's communicated correctly, right? This quarter, this is a priority for us, right? Like everyone just focus on this. As founders, we're going to do our best not to change priority, right? At a month to month level, or at least at a quarter to quarter level. I think that's the best gift a founder can give, their team, giving absolute clarity and not changing plans very quickly. I think that's the first big thing that I'm trying to focus on. The second thing that we're trying to focus on is the culture itself, right? As a company, I think there's a lot being said about how challenging it is to recruit people in the current market. Largely, I don't think we're great at recruiting as founders. Like actually, my team leads, they're very good. Like they're very good at interviewing. They're very good at identifying talent. As founders, we're actually not that great. That's something that we actually acknowledge. We're actually okay with that, right? Like because as a founder, you're allowed to be good at certain things and not be good at certain things. But we are trying to compensate for that by building a very good culture, a culture around things which are very important to us, right? So as a company, like it's very important to us that we're frugal. We are not a very high spending VC backed company. So it's very important for us that we recruit talent at the correct levels that we can afford, to spend money on channels that we can afford, and bring ROI to the company at large, like which is in line with whatever we're building, right? So aligning that discipline is super important, like amongst our entire team. It's very important for us that we get our team excited about our industry, right? If you're not fundamentally interested in real estate or prop tech, it's going to be very difficult for you to build. It doesn't matter whether you're a customer success manager or an engineer, right? You need to fundamentally like this industry. So we're trying to take efforts in doing these things, right? Like making sure that the culture is good and tight. That's the second thing that we're focusing on. Third thing that we're focusing on is storytelling in itself. And that's something that you realize that it's so important, right? Like as a founder, like it's something that we've not paid enough attention to, just assuming that like no people know our story, but that's actually not the case, right? I think it's a much longer process where you really think about what is your story. You think about ways that you can get this story out into the public at large, to your team, to your customers, potential investors, partners, and repeatedly, like getting that message across consistently. You can't keep changing your story too often, right? And like it's a process. Even we're trying to figure it out, but that's the third thing that we're trying to get better at, like with respect to storytelling.
Yeah. No, storytelling is, I think one part of storytelling is just consistency, right? Saying the same thing, just do it, as they say, in every channel, at every instance also, right? So one thing I realized, like from talking to you, is that you are the antithesis of the typical naive first-time founder who runs into the, who builds a startup around a problem, like, chasing a problem, right? And building a solution for that. So you've actually taken a step back, analyze what the market is like, developed a thesis, and then converged on a particular problem that you wanted to solve, right? So you've actually thought about not just solving the problem, but also what problem to solve, which I think is pretty amazing, right? So any advice, to founders or, wannabe founders who are listening to this podcast on how to go about discovering that problem for themselves and, how to build up idea, product, company around it?
It's interesting. There's like two things that I've started telling founders, right? Like who ask me for advice. See, I think the market you're playing in is way more important than the problem, right? See, something as small as, am I going to build in food tech? Am I going to build in insurance? Am I going to build in prop tech? Am I going to build in social? Right? This seems very, very high level, but actually speaking, this decision will have, this is the biggest driver of your eventual outcome, right? If you were in crypto like 3 years ago, right? Like you're possibly a billionaire right now, right? No one saw it coming then, but then like it's so big right now, right? You could have been doing whatever you wanted in like food tech, right? Like 3 years ago, if you were starting, you wouldn't be anywhere right now. That game has been won by the big players, like wherever it is, right? You could have been, if you were anyone except an Uber or an Ola, and you were building in whatever, like in the driver space, you would be nowhere right now, right? But if you were building something in edtech 2 years ago, you're doing so well right now, right? Because the market just like worked in your favor. For so many other reasons as well, picking market is super, super important. Second thing that I've actually realized about the market is that a lot of talent goes into market. People care as much about like which industry am I going to be a part of. I know so many people who just want to be in e-commerce, right? Like I cannot convince them to be in prop tech because they want to be in e-commerce, right? So talent also chases industry, capital also chases industry. So at the end of the day, you have to be in the right industry, right? So really think about why you want to be in that industry, and also like write it down as a thesis, right? Like this is the reason why I'm building here. So that's the first and foremost thing that I would tell anybody. Second thing that I have very strongly started recommending founders is that do real market research, right? And when I say like real market research, I think by the time most founders don't approach it this way. Like they would have had a problem themselves, and then they're like, okay, like I'll try to build a solution, and then ask like 4 or 5 very close friends, and then oh, this is going to happen, right? I think doing real market research is, I think it's an art, right? I would 100% also recommend, like maybe it's worth your time and money to just like engage someone else to do it for you, so that like the outcome will be like unbiased, right? Not for any other reason, just so that the outcome can be unbiased. Even if not, I would 100% recommend a potential founder to speak to not less than 50 actual potential customers, right? This activity alone can take like anywhere from 30 to 60 days, but it is 100% the right thing to do. Because if you are doing the research correctly, without bias, like really doing this in the right way, at the end of it, you'll either get the idea which you are 100% sure about, because you spent all of your time picking your industry and just speaking to people, right? So you can build the company with a tremendous amount of confidence. And if you've done the research correctly, you would most likely get like some 5 to 10 customers right there, right? So you'll even get like people to co-build your product with. But even if not, you can build with a tremendous amount of confidence, right? If at the end of this you realize that the initial idea that you had does not have as much validity, right, as it seems, it might be disappointing in the very short term, because whatever idea thought that you had, oh, I'll build a company here, like that's getting negated. But it's much better that it get quashed after 60 days than after 6 years, right? It's okay. Like you can spend another couple of months and like chase the next industry and the next idea.
And you've also honed the muscle to validate an idea as well.
Oh man, see, lot of first time founders, right? And I made this mistake like as a first time founder as well. So at that time I thought like, how difficult will it be to get landlords to give me their property, right? Like to manage it on their behalf. It seems like a seemingly simple enough thing. I asked a couple of my family people, will you give this, that? No, they all said yes, right? In reality, it's so difficult, right? Like I did not realize this, like what I took as a given, it was very difficult. Like how do I even get myself in front of these people? Actually, the thing is, when you go through the tough thing of market research, and I've been doing this with a couple of my friends who are also like trying to set up companies, right? Like you actually realize go to market as well, right? Like something as simple as like, hey, do I have the network to get me like some early customers and early intros? Do LinkedIn pings actually work? Should I approach them on Twitter? Like how, like, I mean, should I just buy a database from somewhere and like just cold email people? What actually works, right? Like with respect to, you actually get very early insights into GTM as well. And really, it's not easy on getting like 50 potential customer. It's not at all easy. Nobody wants to help, right? Especially like a stranger. So that's a very second important thing as well. Like if you can get 50 people to talk to you, like it actually shows that you have metal, right? Like you can actually go out and get and win customers as well. That's a hidden reason to do this.
Yeah. No, it's about convergence. I mean, 0 to 1 is all about convergence, right? Figuring out what really works and really, building a sort of a play on that. The other thing which I found a little bit, unusual, heterodox about you is the focus on frugality, right? Versus, the opposite of what we're seeing. Maybe we're biased, but I mean, we see a lot of M&A, we see a lot of funding activity, and so on and so forth. To me, SaaS is like, I mean, it can be so profitable, right? I mean, you have like crazy amount of margins, and you have large markets and decent amount of growth also, like 20-30% growing every year. Then you take whatever sort of a industry that is sassifying right now, right? So why don't you see more people sort of build a lifestyle business? I mean, is it like the sort of ready availability of money at this point of time, or you feel like the aspirations are slightly different, or perhaps, I mean, it's not that easy to build a lifestyle business around SaaS itself? What do you think?
No, I definitely think you can build lifestyle businesses around SaaS itself, right? And see, I think largely, right, there is a perception problem in the Indian startup ecosystem, because when I'm speaking to partners like in Europe, like when I'm speaking to like partners in the US, there are so many entrepreneurs who are starting with the goal of being a lifestyle entrepreneur, right? Like I don't want VC, I don't want to exit, right? I want to get to 5, 10, 15, 20 million in revenue, 20 to 30% margin and I'll continue running it, right? Or if I want, I can exit after 5-10 years. But that's basically what I'm shooting for. That's a beautiful thing, right? Like, actually, these are all the types of entrepreneurs. Like, over time, they actually create like more employment. They create like more like, like value like to society at large, and they have to be celebrated, right? In India, for some, not in India at large, but I think in the tech ecosystem, there is an heroification which happens of the outlier returns, right? And I think maybe to an extent, like it's there in like the Valley. I think it must be there in China as well. But there is a lot of glorification which happens, right? Because when you open like a TechCrunch or like when you open a Your Story, it's only the funding news which gets covered, right? That entrepreneur that reaches like $1 million in ARR, like nobody talks about them, right? You raise 1 million in funding, like of course you're going to get like a feature on like every media publication. No one really talks about like revenue here at all, right? So we're not yet celebrating the right type of entrepreneurs, right? As a society at large. I think that's going to change though. I think we're going to see in the next 5 years a lot of micro acquisitions happen. Micro acquisition is something from, let's say, 5 to 30 million maybe, right? I think a lot of companies can get acquired. Like maybe once you hit like 1 million in ARR, right? Like you have like so many options to, you can raise if you want, sell if you want, continue building without raising capital if you want. You get like so much optionality. I think some founders in the next 5 years will start selling. I think we're going to see a lot of 5, 10, $15 million acquisitions in SaaS. Maybe like a larger SaaS company might buy it, like maybe like some US company might buy it, maybe like PE firms might buy it. There's a lot of SaaS roll-up companies which are coming up. They just buy like 30, 40 different SaaS, like across the world, and then they start selling it, to various types of customers. I think maybe they might be interested. I think we're going to start seeing that. And as and when we start seeing that, hey, it's a very legit option for you to start a company, don't raise that much capital, build for like 3, 5, 7 years, and maybe exit for $10, $15 million, right? It's an fantastic outcome, right? I think the folks at Upeka, that the value accelerator, they talk about this quite a bit, right? A $10 million acquisition for a 2-member founding team who's just like raised a small round of capital to begin, right? It's a life-changing outcome if you're going to come out with $5 million in the bank. And then you can go ahead and do the next company, right? And that you can maybe like shoot for the stars. I think that's going to happen. We're very early. I think today we're possibly in SaaS where e-commerce was in 2014. Yeah. Right? Like we're just scratching the surface. It looks like we already have 2-3 unicorns and like there's about 40,000 employees in SaaS. So it looks like we're like slightly a bit more mature, but I don't think so. Like I think we're maybe like 1% done. Right? SaaS is going to be huge, right? Like in the next like 5-10 years. And as the industry evolves, I think this is going to evolve as well. Very nicely, like we're now seeing alternate financing models as well. Like revenue financing is coming in. Like there's a lot of different ways, right? Like to raise capital for SaaS. Very, very good thing, right? So now that like those avenues are coming in, we can start seeing like different outcomes. Some companies will definitely take the larger approach, right? We're going to like build $1 billion revenue generating business. Of course, some companies should. Some companies will take an approach that maybe like 20 million, 30 million is what we're shooting for. Of course, they can take that approach as well. So we're going to see like different types of SaaS coming up over the next few years.
Right. Yeah, largely, I guess it depends on the founder's mindset also, right? And temperament and everything in terms of what they really want out of this whole experience. Yeah, so definitely interesting times, I mean, I think we're seeing a convergence of so many different things, cloud, and then, payment infrastructure and the sheer base of talent that we have in India, right? I mean, tech talent. So I mean, great times ahead. So this was a fun conversation, Ajay. Thank you so much again for your time. I really enjoyed myself and look forward to speaking to you again sometime.
Fantastic. Thank you so much for having me on today.
Thank you so much for listening. If you liked this episode, then don't forget to subscribe to us on your favorite platform and share this episode with all of your fellow startup operators. Also follow the Startup Operator on LinkedIn and Twitter for more updates. Stay safe, take care, and see you soon on a brand new episode of the Startup Operator.